Okay, so let's take a look here. So we had made this chart. This was earlier last week. And so I had shared this within the Taylor's code with our private group, basically showing what the local price action on Bitcoin was doing. So bigger picture, I mean, if we want to look real quick, you guys know where we're at in the cycle. So we had this massive, so this was last bull run. We had this double top in 2021. This is the last year of the bull run for last cycle. Came into this massive bear market reaccumulation range. Boom, boom, boom. Then we started the bull run again in 2023, which was right in here. Yep. It's like right at the turn of 2023, we start this current bull run. This year, we came into a halving year. Well, 2024. So last year, we came into a halving year, which is the year after a halving year is the most bullish year for crypto. So we came into this 7-8 month long reaccumulation range, this pause for 7 to 8 months. Finally broke out of it to where we're at right now. Okay, so we had this big breakout on Bitcoin. We went much higher, and we actually topped out about $108,000. And as we had topped out, we created this new range up here. Okay, so this is how we had drew it out for those inside of our organization. So what had happened was Bitcoin started this new range right here up at 103 in this wick down 91 whenever we had that big leverage flush to knock out all the leverage traders, take out their positions. So we get this huge scammy wick on Bitcoin, knock out all the leverage traders, then we come back up to the mid range. So we start ranging again and starting to get some reaccumulation here for larger players. But towards the beginning of this range, we had this bull trap, which was this fake breakout that we had to up to 108,000, which I'm sure many of you remember in December if you were on the charts. So we get this fake breakout, this bull trap, catch all these leverage traders with their pants down, and then they immediately nuke it all the way back down to the bottom of the range. And this is where people got afraid again. So when we got from 108,000, everybody's super bullish. We think we're going to 120K, 140K. And when we instantly nuke all the way down to 92,000, right? So that scared a lot of people, knocked out a lot of people out of their positions. They got afraid. They started taking profits, started doing tax harvesting before the end of the year. And so we started re-ranging again, and we came all the way back down to the bottom of the range again. So when we had created this chart, we already knew that this was the bottom of the range. And so what we had done on Bitcoin, well, it wasn't Bitcoin specifically, but when Bitcoin was at the bottom of this range, this is whenever we started reaccumulating more of our bags. So right in this area, this is where we were loading up again on the Boys Club memes, basically our ETH beta, some Solana memes that I had picked up and we had posted within the group. This is where we started accumulating again because this is the bottom of the range. So we expected there to be a move back up on Bitcoin. Now, we did also entertain this scenario quickly, which would have been a deviation of the range to the downside as well. Now, why would we have done that? Well, because if we had a bull trap to the upside, we potentially could have had a bear trap to the downside. So this is something that plays out a lot in local ranges, where if you get a deviation at the top, you get this bull trap, come back down to the bottom of the range, then we're going to get a deviation to match the top of the range, which would be the opposite, be a bear trap. So it looks like it's going to break down and come all the way down here and nuke. Leverage traders start to open up short positions. The price action comes in here, right? So it does something like this. And then it eventually comes back up in here. Yeah, that fucking brush is dog. So that's what we had also outlined was a potential possibility. So, and if it did come down here and it had this deviation, we still would have been reaccumulating up or down here because we're bullish on Bitcoin still moving up further on a long enough time frame. We actually didn't get that move, which we'll take it. And that's why we were accumulating at the bottom of the range, just in case you don't get that move. So we had already loaded up our bags again. We come back up, we reclaim the mid-range. And then literally right here on this candle, so right after this red candle, we had redrawn these two paths that could play out on Bitcoin. So path one was we come up from the mid-range and we hit the top of the range, reject, come up here, and then we, boom, start pumping. Or from the mid-range, if we lose the mid-range, turn it into resistance, come back down to the bottom, boom, 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 up again, either way. Fortunately for us, after I drew these lines, it decided to follow my preferred line, path one, and that's the move we literally got today on Bitcoin up So we should test the top of this range or get close to the top of this range right about 103.5, 103,000. We'll probably reject and then break out, turn it into support, the top of the range, and then boom, we start pumping hard. So that's where we're at on Bitcoin. So we're looking good. Basically, we're looking really good. As soon as we get out of this range again and we do a little breakout similar to this, it won't be a bull trap and we should just start sending. Okay? What do you think, Bees?
Yeah. So, I mean, we've been saying, and I've been preaching it this entire time that, how important it is to zoom out on the chart a little bit. Because
Right.
it's like if you look at the last month of price action on Bitcoin, it's a little bit scary. Like it doesn't really look great. But then if you zoom out and you include at least 3 or 4 months of data, all of a sudden you see that Bitcoin's definitely still in an uptrend. So it's just super easy to get scared. If you're using like CoinGecko or something, and that's where you're getting most of your data from, and you're looking constantly at the daily chart or you're looking at the weekly chart, and that's all the data you have, you're going to be pretty scared. And you're going to think whenever Bitcoin pulled back to 90,000 that it was over. But then, you zoom out a little bit, you look at 3, 4, 6 months of, of price action, figure out pretty quickly that, yeah, Bitcoin's definitely still in an uptrend. And so just contextually looking at what time of the year it is, where we're at in the cycle, knowing that Bitcoin is still inevitably going up. Um, yeah, I mean, you're going to take advantage of those pullbacks to 90,000, 95,000, and use them to your advantage to make sure that whenever shit does start going up again, inevitably, you're making even more money than you would have before. So it's just all perspective, and it's zooming out and looking at enough data and realizing where we're at. Because, yeah, that bear trap probably would have scared a lot of people. And if you're looking at a daily or weekly time frame and that's all you have, yeah, you're going to think it's over. But
Mm-hmm.
for us, when we're looking at 3 to 6 or 12 months of data and looking at where we're at in the cycle, we're going to take advantage of that bear trap and be buying, not selling. So,
Exactly. Yeah, and that's the thing is exactly what Logan said, because you get these pullbacks and you become afraid and disinterested and disengaged from the market, not understanding that if you're following gentlemen like ourselves or you're part of our organization, you understand what the price action looks like within a range, or from a technical analysis perspective, there is no fear because you understand we didn't even break out of the range, right? The only time, me personally, I would even start getting a little bit nervous is if we did do a bear trap and that bear trap just kept coming down, down, and down. Next thing you know, it's not a bear trap anymore. Okay, now I'm scared. But it doesn't matter how low Bitcoin comes. If it's still within the range that we had created, there's nothing bearish about that. It simply just means, oh, we're at the bottom of the range. Guess what? Open up a long position if you're trading leverage. Oh, guess what? Go ahead and reaccumulate your positions, whether they're meme coins, Bitcoin itself, beta to Bitcoin, etc. Reaccumulate right down here. That's just simple market structure. You just take a look at it and say, oh, it's at the bottom of the range. Great. Let me buy more. So now you're buying down here like we had. All you've had is upside since then. All you've had is upside. And the only way for you even to come break even again is this comes all the way back down, which it won't, to 91, 92,000. So this is why you use ranges like this to say, oh, this is a great entry point. Now I can just benefit from the upside over the next couple of weeks, couple of months.